So if you consider for a moment the most pressing issues we are facing, climate change, the concerning rise of food insecurity, the over-exploitation of natural resources, and the growing threats from natural disasters, all of these call for new risk intelligence, new risk models and techniques that are more dynamic, that account for the changing nature of risks, exposure, vulnerability, that are a lot more affordable. If you think about the pitfalls of, let's say, over-investing into bespoke models and techniques that are not replicable from one country to another, much more timely to sort of enable forecast-based financing, anticipatory action, and also near real-time disaster risk financing applications. And I would say more operational, more actionable, that are concrete, tangible, and allow decision makers in data-poor environments to really access capital risk insurance solutions, for instance. So this is what's been happening over the past maybe 10 years with latest satellite data really unlocking a number of applications that were barely conceivable a few years ago. So you have this unprecedented amount of data, which combined with new processing techniques allow decision makers in the public sector, but also private sector partners in the risk industry to design, anticipate, mitigate, and better respond to some of these disasters. I'll probably mention a couple of examples where this is most telling. Let's say a dam being built near a river. This is going to change entirely the risk landscape for populations and livelihoods that live, let's say, downstream. So what we are saying is rainfall alone is no longer a good measure of the potential impact on livelihoods. You need to think about more disruptive, alternative solutions to measuring and anticipating that risk in that specific context. Another example would be the recent month of February, which was one of the most severe, extreme month on record for parts of Eastern Africa and Southern Africa. Meaning you are really pushing the boundaries of what used to be, a 1 in 200 year event, a 1 in 1,000 year event. And this is where traditional modeling techniques show significant limitations. So in both cases, you need to have technology risk models that can cope with these very complex, fast evolving, let's say, risk environments, and what I would qualify as accelerating risk environments. So I'll mention a couple of examples. One is parametric risk transfer. Parametric risk transfer connects the data and the technology that we talked about with concrete applications on the ground. Applications that can be more affordable, that can be more timely in the way they respond to disasters and, let's say, clients' needs. You are seeing a number of private sector initiatives around the topic, with many insurance, reinsurance, broking industry companies setting up their dedicated teams. We at Gallagher Re, we set up our own dedicated practice on public sector, climate resilience, and parametric 2 years ago. And we connect clients, private or public sector clients, with that data, with satellite constellation data providers, with insurtechs, in order to ensure easy, facilitated access to that technology. There's really strong interest for these new risk transfer products, which often come at a fraction of the cost. So there's a number of benefits but I wouldn't say this is a silver bullet. Oftentimes, it acts as a fantastic complement to traditional insurance and reinsurance product. The other example I was keen on stressing would be resilience risk pools that connect the data we've talked about, but also the expertise through parametric teams that I just talked about, and the demand in countries. These resilient risk pools, they offer the perfect platform for member countries, development partners, civil protection agencies to share knowledge, expertise, what works, what doesn't work, and together, often at regional level, decide to buy or not de-risking products. Countries can pool risks together and access de-risking products at sort of more affordable costs. They leverage not only the technology, but particularly the fact that most of that data, we're talking big data, satellite data, is often free, open. And I think we should mention the Copernicus satellite data sets, the NOAA satellites, or probably the ESA Global Development Assistance Program, the GDA program. All of these organizations, they offer free access, facilitated access to some of these complex data sets and support their country clients with a lot of capacity building activities in order to turn the data into actionable information, in order to raise awareness and make sure that decision makers are fully informed when it comes to understanding what works, what doesn't work, and the limitations of some of these products. This platform also connects the demand, the technology with regional partners, partners that are very active in the regions or on specific topics, niche expertise topics such as satellite data processing. So these are two strong examples of the need for these connectors and these intermediation entities to ensure that the data makes sense and provides better value for money for clients and countries affected by climate change. So the data and the technology is only an enabler in the sense that they unlock access to new risk transfer applications. In some cases, at a fraction of the cost. In most cases, they're going to improve the perception and the transparency of some of these products. So there are qualitative benefits as well. Now, in order to achieve scale, you need to look at a more holistic take on disaster risk finance, insurance, disaster risk management, trying to address both sides of the equation, reducing risk and transferring the residual risk in efficient ways. And that calls for public-private partnerships typically. In other words, a strong alignment of interests between governments and private sector partners in terms of affordable but also profitable and sustainable products for all parties involved that reflect also the interests of beneficiaries on the ground. This requires a lot of educational work in order to sensitize governments, public sector, decision makers, regulators, insurance companies, reinsurance companies, civil protection agencies, populations on the ground, on the potential, on the benefits, on the value for money of some of these products, but also on the limitations of some of these solutions that are no silver bullet and should never be considered a standalone solution. They often act a lot better when complementing, let's say, traditional risk modeling techniques or traditional insurance and reinsurance products. But all of that is to a large extent already happening in our view, and we are confident that there's going to be more take-up of some of these solutions going forward.